tariffs and recession fears are gripping global markets. The opening bell rang on Wall Street this past hour, and stock futures tumbled in reaction to U.S. President Donald Trump's tariffs. Now, today is already being called Panic Monday. That's because there is a lot of red on the board right now. The TSX has fallen more than 700 points in the early trading. The Dow, NASDAQ, and S&P 500 all down more than 3%. For perspective, this is a 20% pullback on the S&P since February, which was officially a bear market territory. Now, Asian markets also plunged overnight, with Hong Kong's stock market leading the losses. It dropped more than 13%, the largest one-day slump since 1997. European markets are also down about 4.5% across the board. And inflation fears are becoming more pronounced, with some economists warning a recession may be looming. CBC Scott Peterson is here now following everything that's happening. So, Scott, break this down for us in layman's terms. What are you perceiving as you look at these markets? I think it's the third straight trading day that we've seen in this kind of slump. Also differentiate that bear and bull market for us.
Yeah, just starting with that, a bull market is when the market's gone from some level to a 20% pop from that. That's a bear market. That's enthusiasm. A bull market. A bear market is when it's down 20% from a recent peak. So a couple of months ago, we had the S&P 500 hitting certain levels. It is now down below that about 22%. So we are now officially in a bear market territory, and a lot of trading programs calculate that, and that could bring more buying, that could bring a ceiling, it could bring a floor. But let's take a look at a live look at what we were just looking at, Natasha, to just reiterate how much red is out there. That's over 400 points to the downside, and this is on top of market meltdown last week that saw $9.5 trillion wiped out from market value around the world whatsoever. There's another element here, is the fear index. This is a VIX index that's tracked, and these markets are just quite frankly afraid that this fear index has not been this high going back since the beginning of the pandemic. So it shows you how much confusion, how much worry there is in these markets. And I've seen quite a few of these market corrections. This harkens back to 2008 or even to 1987 as far as the severity. There's $9.5 trillion lost. And this is also unusual in the sense that this is all coming down to one person, and that's Donald Trump, the U.S. president, making this. So the markets are very confused because at any given time, unlike the pandemic, unlike the financial crisis back in 2008, which we were embroiled in, this could change by the whim of a single person. So we've never seen anything like this. This is unprecedented in these markets. And it's not just confined to North America. And there you see another 1,000-plus plummet for the Dow Jones. And let's get to the European markets as well, because North America is not alone here. We're seeing London down about 4.4. Frankfurt, the car makers, all the German car makers to the downside. The Paris CAC 40 down 4.4%. We're also seeing a lot of the financial companies because of the prospect if these markets do hit a recession, lenders could stop lending, and that would hit bank profits very severely as well. We're also looking at the price of oil. We're seeing that if there is going to be a recession, less economic activity, the price of oil comes down yet again. It's now flirting with about $60 a barrel. Those are lows that we haven't seen in 4 years. Copper plummeted as well. That's a building material, a good indicator. And we're hearing more pushback now from the business community that used to be, well, they're still on Donald Trump's side, but that's a tricky thing to do. We're hearing from JP Morgan, there's a 60% chance of a recession. Goldman Sachs came out this morning saying they think there's a 45% chance. And also Jamie Dimon, who's the head of JP Morgan, had this to say in a statement to Donald Trump, saying that the recent tariffs will likely increase inflation and are causing many to consider a great probability of a recession. These significant and somewhat unprecedented forces cause us to remain very cautious. Now, that's a very cautious language. Nobody wants to upset the U.S. president who is basically controlling these markets, but the markets are pushing back as well. They're saying they do not see a plan here, and we've heard from Truth Social with the president saying things in all capitals. There is no inflation, and he's pressuring Jerome Powell, the U.S. Federal Reserve Chairman, to lower rates as soon as next week. But these markets are not buying it. They're simply saying if there is a plan, they do not see the plan, or the plan doesn't make sense to them. And so that's why we're hearing these alarms and this red markets day after day, now for a third severe day to the downside since that big tariff announcement back Wednesday.
Just very briefly, Scott, because this information can be so overwhelming, it can kind of numb people out. You mentioned a couple of times $9.5 trillion gone. People think markets go up, markets go down, but this means it's gone. There is no recovering that $9.5 trillion. Is that right?
Well, but that's a paper loss. I mean, if people hold on, they could make it back. I mean, if that's next year or 2 years down the road. But the problem being is a lot of these are smaller investors. You know, they're looking at their 401ks or their retirement savings here in Canada. They don't have the luxury of sitting around for a couple of years. A lot of people may be in margin calls. They have to sell. So these are very real losses. And the unfortunate thing is they hurt the poorest of investors and not the big institutional investors.
Right. The banks are going to make their money. Scott Peterson, thanks so much for that.
Thanks, Tasha.